Value Stack podcast is now sponsored by Coinbeast.com. If you need extra one-on-one time to get your Bitcoin questions answered, book a call with a Bitcoin pro at Coinbeast Connect to get expertise you need with topics ranging from security, privacy, mining, Lightning Network, and more. It's easy to get started. Simply go to Coinbeast.com, click Connect at the top of the page, and book a call with the pro for the topic that you'd like to discuss. So thank you guys at Coinbeast for sponsoring this show, and check them out at Coinbeast.com to get the Bitcoin support you need. Now, on with the show.
All right, welcome to episode 12 of Value Stack Podcast, where we talk all things value investing and stacking sats. We have a special episode today. We have our first guest, Sam Callahan, he's a Bitcoin analyst at Swan Bitcoin. So welcome to the podcast, Sam.
Happy to be here. Thanks for having me.
And as always, we've got BTC BAP, and I'm Shaper Funds, and we have a lot to talk about. So we'll hit the current events and just start to riff on what's going on. I think all markets are in an interesting place right now, traditional financial markets, as well as Bitcoin and crypto at large. How was your guys' night?
It was great. I mean, it was great. I actually enjoyed it, man. I thought it was a really good cleanse of, the market in general. It was great.
Sam was up late working last night as Bitcoin was selling off 20%.
Yeah, it was on sale, man. Stacked some sats and got some cheap sats. So all in all, it was great.
How's bells?
Good night.
The purge, this is, they didn't make a movie about this one, but dude, I remember refreshing my Strike app and just looking at me like, whoa. Like it just said 48. Now it says 44. Oh wait, now it says 42. Oh, okay. And we've been in these we've experienced these drawdowns before, but every time it happens, it always just reminds me, nothing's guaranteed, man.
Yeah, it was the market rug pull, but it's a good thing. If you looked around, everything was pretty toppy and there's a ton of excess signs everywhere. And you just had a lot of people who made a lot of money really fast who had to learn a little bit of a lesson, I think.
And there was a full-on liquidation yesterday in the equity markets too. Like DocuSign, we were riffing on this like before. DocuSign was down like 40 something. Asana was down like 30%. Smith & Wesson was down 30% yesterday. Just, full.
Everything, I think, man.
You saw that liquidity crunch kind of.
Yeah.
The cards were in play there, but we flushed it out. I think we're at a healthy spot now.
Well, I think, I think there was like over $2.5 billion worth of liquidations in the crypto industry, and then about $1 billion on Bitcoin. So it's a lot of leverage that was washed out essentially. But this wasn't just in Bitcoin. It was the entire freaking market was over levered. Yep. And margin debt was at the highest in since 2008 in equities. Everyone was borrowing to buy shares of everything. And I think on Friday when stocks got hit, there was probably a couple of hedge funds that got blown out. And those hedge funds probably held Bitcoin. And what's open, on the weekend that they can sell only Bitcoin. Right. And so you saw them just like sell off their Bitcoin. I think a lot of whales had to sell to, meet redemptions, and it just margin calls, forced selling. You had cascading liquidations everywhere. And, this is all these stop losses got hit, and this was, needed. I think it's just, everyone needed a lesson in markets. Like everything was just at crazy valuations and still is. That's the funny part. I don't really think this is over. It's probably gonna get worse before it gets better, in my opinion.
Yeah, and we'll talk more about that later for sure. It's just what's going on with the central banks and interest rates and everything. It's all pretty out of whack. But just want to say rest in peace, Kathy Wood. You had a great run.
Yeah, Kathy's having a rough like 3 months. That's for sure.
Yeah. Well, before Bitcoin sold off, before financial markets sold off, we had some interesting news at the beginning of the week. A couple things to do with Jack Dorsey. So he stepped down from Twitter, and sounds like he's going, I don't want to say all in on Bitcoin, but pretty much all in on Bitcoin over at Square. That's
He's totally going all in, dude.
He's going all in, man.
He leaves Twitter, then changes the name of Square to Block the next day.
Yeah.
Anyway, sorry, go ahead, Bo.
No, that's the conversation I meant to start.
I mean, like, Bitcoin 2021, he said if he thought Bitcoin needed me, he'd leave Twitter or Square. So I think that's really interesting in the context of that quote. So you can kind of infer that he is going full-time Bitcoin, or he wants to focus more on it. They're doing a lot of interesting things over there in terms of like the decentralized exchange he's got a project with, and he wants to make a hardware wallet that's decentralized, a self-custody hardware wallet. So, I mean, I think it's great for Bitcoin. I mean, Jack's like a leader, and it seems like he's really gets it. He understands the mission. He understands like what we're dealing with in terms of this technology that could really make a difference and solve a lot of issues facing the world. And so I think he's one of our best allies, and I think he's focusing more on it. And I don't think it's a coincidence that Twitter, like 24 hours afterwards, just comes out with these like censorship policies, essentially, of like banning private media, and you can't reply, and there's like safety modes now. It seems to me that Jack may have been, defending the line of freedom of speech, and he just couldn't hold him back anymore. And so he had to leave because his principles didn't align with Twitter. And that's kind of just my speculation, but just seems, I don't think that's a coincidence.
No, I remember like 3 or 4 years ago, he was coming under a lot of shareholder pressure. It was like not too long after Twitter IPO, it like ran up to $70 per share, and it fell all the way to $14 per share. And at that time, he was leaving to go on these like silent meditations as the CEO of 2 large publicly traded companies, and shareholders just really weren't happy with him. And but that's just the kind of guy he is. I think he's a pretty thoughtful and clear-eyed kind of thinker. So
yeah,
this is what he's deciding to do now, and I like it a lot.
I love it.
Well, yeah, and he said that, right? He said if there was anything else he'd be working on, if it was anything else, it'd be Bitcoin. And he also said that that if Twitter was so much bigger than him, right? And that was why they're pushing forward this blue sky open source model. And so I think you guys are right. Like, he probably saw the writing on the wall, knowing Twitter is basically going to be a co-opted public good at some point, and he has no control over it. But he did, Bo, I remember going back and forth about Bitcoin being integrated into Twitter and Lightning. And it's funny, literally the day after Jack leaves, they integrate Ethereum. But it doesn't, like, what are you going to pay, $40 to tip somebody? Anyway.
Oh my gosh.
Yeah. Well,
I mean,
yeah. What do you, Sam?
No, I mean, it's just, I agree with everything. It's going to be interesting to see Twitter, though, because, obviously Bitcoin Twitter is important for the industry, I think, just communication wise. It's where the industry lives, and the industry started on the forums, went to Reddit, and now is migrated to Twitter. And it'd be interesting to see what we come up with next if Twitter becomes this like, unfree place for communication. So
I'm asking this out of curiosity because I really don't know, but is Blue Sky more a Twitter property, or is that more a Jack Dorsey property? Is he still going to be working on Blue Sky, do you think?
It's an open source thing. It's not anyone's. Yeah, it's like on GitHub.
Okay. Yeah, that's from my understanding. There's a lot of like kind of secrecy around that still, I think. I don't think they've like let out information about it really.
And as
but
far
it's
as I
open
know,
source.
Spiral is too, which was Square Crypto.
Square Crypto. Yeah.
Yeah, they have released 3 different things. The Bitcoin Design Guide, which is
I saw
Bitcoin.
it. It's really cool.
It's really, really like very simple. It's
Yeah.
more of like a user experience guideline, and user like design elements. And then they have the Lightning development kit written in Rust, and the Bitcoin development kit, which I think is also written in Rust.
Yeah, it's really good. I mean, it's basically just shows you like how to receive, how to send. It's great for beginners and everybody, I think. Just more educators and just more bigger players dedicating to Bitcoin only. I mean, it's good for Bitcoin, hands down. I don't really see any flaws in it. So,
Well, to change,
hell yeah.
hell yeah, Jack Dorsey. To change direction slightly, I didn't catch Michael Saylor on Tucker Carlson. Did either of you guys see that?
Oh, dude, that was
Yeah.
like, send that to any person you know over 50. That doesn't hate Tucker Carlson because he
Whatever.
is on Fox. Like,
Yeah.
Tucker Carlson doesn't really talk, but the way I sent it to my dad, my dad's like, it's my dad. He's like conservative and lives on a farm and stuff, like the way Michael Saylor talks about energy and just the audience that he's speaking to and the way he's describing it.
He's just really, yeah.
Haven't
He's
seen
just,
it that good in a while.
I feel like he's really like peaking in terms of his orange pilling skills. It's like really coming together for him. It was like a perfect 8 minutes of Bitcoin orange pilling.
It
And
was an
he's just
hour and a half.
Oh yeah. Sorry, I just saw the clip. That's kind of what I was
it was
talking
an
about.
hour and
But
a
yeah,
half. It was incredibly long, or
yeah,
hour and change.
but he's just like so talented at getting across these analogies for people, and he just has analogy after analogy to help people understand these like more complex topics. And then I just loved what he said about, if you're going to save for the next 100 years, what are you going to put your money in? And like when people start thinking about these things that Bitcoiners have been saying for a long time, but you get somebody like Saylor saying it in his own colorful way that resonates with people. He's our like number one cheerleader right now. I throw all my support around that guy.
Now, interestingly, Proof of Keegs had tweeted earlier today or yesterday that Saylor's a Trojan horse, and I think I've heard Keegan kind of mention some stuff around this before. Do you think there's some validity to that, or what is your take on both of you?
I think I think where that comes from is his comments about like the dollar. Like he doesn't like hate the dollar. He thinks Bitcoin and the dollar are going to coexist and stuff, which might happen temporarily, but like it's kind of a zero-sum game. Like you have to sell dollars to buy Bitcoin. Like there's only going to be one winner. So like I think Saylor still has to like lose his affinity for the dollar because he still, supports it and thinks it's going to be around, and they don't conflict with one another. And then the other thing is he thinks regulation is good. So he thinks regulatory clarity is really good for Bitcoin adoption, and he wants to push all this like institutionalization of Bitcoin. And that's where I think people are sometimes like calling him out, because obviously Bitcoin doesn't need anything and it'll just win on its own. And, obviously if bad regulation comes out, which they're known to do, bad regulation, it's not like they're going to do great regulation that could just hinder things and delay adoption rather than help. And then the last thing is just he has a shitload of Bitcoin, like a shitload. So, he doesn't have any power over the protocol. Like that doesn't matter. But, you don't want, people to get too much Bitcoin too soon,
Right.
Which that wasn't a concern really. That was more of a concern early on. But still, when you got this guy just raising money, hundreds and hundreds of millions over and over again, just eating up all the Bitcoin. Obviously, if he just dumps all his Bitcoin, it is going to like maybe affect the price a little bit, I think.
A little bit.
Like a little bit. If we ate it up, that would be like bear whale number 2. I mean, if Saylor goes bearish, and then we'll see if the market could overcome that selling pressure, and that would be an ultimate fight. But I don't think that's going to happen. I think he's in it for the long haul. I think, personally, I think he's a good thing for Bitcoin overall.
I was listening to Breedlove with Eric Voorhees on.
Mm-hmm.
And that was really interesting because, of course, Eric Voorhees started out at Bitcoin, started Shapeshift, became kind of a altcoin advocate.
Mm-hmm.
I think he's always been a Bitcoin advocate, but I think this was like right when I got into Bitcoin, like right when the SegWit fork was happening, like the split.
Yeah.
And so it was all very confusing. But to my understanding, later on, he like supported the bigger blocks in Bitcoin Cat, if I remember correctly.
Yeah.
But
no, that's right.
So it was interesting. Breedlove has had him on, and he was just talking about like because you had mentioned the zero sum game of money, and I share that belief as well. But Voorhees does not. And I think they're like hearing him out and how he was talking about how there's different uses for different monies makes sense. But I still can't get over the idea that everything's gonna tend towards one. Like there's one.
It's gonna converge.
Right. There's one best protocol. Like there's one best protocol of internet, the internet protocol. Like I'm sure there were others in the early days. Like there are, multiple social media networks, but over time they get converged to where we all use a handful of them, like
right.
Gab, and there's all these other like Gab and Parler and all. Nobody, Mastodon, like nobody uses them. They use Twitter. Right. And like it's because the network effects are powerful. And I know we're going to talk about Badger DAO and DeFi later. But I think that there is some validity. Like as someone who got into Bitcoin through ETH, like I got into crypto through ETH, like as someone that I would love to see native financial services on Bitcoin, like things like Uniswap, but there's no assets to trade in my mind. Like I don't want to trade any assets. I just want Bitcoin. But I could trade tokenized equities. That to me that makes sense. But I even like the lending protocols where I can go and deposit collateral and take out money and borrow against, that is awesome. It's an awesome idea. I think those are huge potentials, but they're not secure, and we'll talk about that later in the boating accident this week.
Yeah, I mean, I think all monetary networks converge on a single medium because the purpose of money is to take present work and preserve it over time for future consumption. And when more people use one medium, it becomes more effective at that job. And it becomes more liquid. It becomes better price signals for the coordination of like goods and service, production of goods and services. And it's just like a feedback loop. And like, why would you use something that doesn't do as good a job as money? Like, so as more users use it, it becomes better price signals, more liquidity, and it just keeps going and going, just sucks it. And there's more and more users, and it just keeps going and going because that's functioning as money. And so like, why would you ever need two things like that? It's like a language, right? It's like English language. It's how languages spread. Like you can use a different money or like speak a different language, but you can't communicate with everybody else because they're all communicating a different language. And so to me, I think it's a zero sum game. I think most of the demand will converge on one monetary network. And I think Bitcoin's, decentralization and security is like unreplicable, and it already won essentially. And it's not even close. So
do you think that's why up to this point, we've really only seen institutional or national, I mean, let's say institution, call it corporations and governments. Is that why we've only seen that kind of adoption for Bitcoin? Because it is far more secure and decentralized than other crypto monetary protocols?
Yeah, I think, and it's also just like you said, the network effect, branding, like I said, the liquidity, on ramps, off ramps, got the most financial products. It's the most institutionalized. It's got everything going for it. It's the most secure, most decentralized. Everything, right? So yeah, everything else. This gets me into everything else. Just is so much more risky, and it's like apples and oranges. It's just not even the same asset. They have different use cases. They're trying to be different things. And people think that they're just going a little bit riskier, like they're the same thing and they'll diversify, but it's just so much more risk. You are investing in essentially like a high risk venture capital bet and on a technology that may or not work or may not be adopted, as opposed to Bitcoin, which is a money that just stands on its own merits, and it's already working. It has been working since day one.
And there's
right?
that tail risk too, right? Like there's
exactly.
That's the thing. Is like people all discount the tail risk, like these hacks in the DeFi protocols, these execution of upgrades on Ethereum and stuff. Like these come with a potential 100% loss, and I think that people underweight that 100% loss probability, which adjusts your forward expected return. Like if I'm 95% sure that I'm going to make a positive return, but I'm 5% sure that I'm going to lose 100%, that severely weights it,
Yep.
But it's more like, I think it's more like 20%.
Bitcoin is like the ultimate free trade agreement for the whole world. I think I would kind of make that that's my thought. I listened to a podcast. It's a 4.5-hour podcast. You guys are probably familiar with it, but Tim Ferris talked with Balaji Srinivasan, and I think I said that all right. But yeah, 4.5 hours. And Balaji used to be like the CTO at Coinbase, and now he's a venture capitalist, and he says a lot of things I don't necessarily agree with, but he's wicked intelligent. And he said one thing that kind of made me think for a long time, and that was like there's like two different attacks going on fiat currency. There's like the initial money leaving fiat currency for digital assets and Bitcoin, but then there's like the second layer where the technology behind many digital assets is going to allow like kind of like cross asset pricing. So like an infinite matrix where like an order book across all different assets at all times. And this is kind of like the end game. And his theory is like, not only is like Bitcoin a superior currency to fiat, but in the future, there's going to be less of a need for like out and outright currencies, because people would be able to trade assets against each other. And it got me thinking. I don't know exactly what my opinion is on that yet, but
wait, so I mean, how does that solve like the coincidence of wants? Like, is that just barter? What do you mean it doesn't need a currency?
Basically barter. Like we would be able to set prices on our assets, like limit orders on anything we own, a car, a service we provide.
Because it's tokenized, and because
marketplace,
it's got this oracle that feeds price information to everything that you could. The whole problem with barter is that there's this inefficiencies that come with it. But if you had some sort of price oracle, and I haven't actually seen what he's talking about, I'm just kind of guessing, but I can imagine where like if there's this price oracle that is able to provide like a unified pricing source, but the problem then you get is into centralization.
Yeah.
Yeah.
Yeah, exactly.
That's
I
just
mean,
what
that's,
Bitcoin was built to solve.
yeah, exactly.
Yeah. Yeah. It's interesting. At one point in the podcast, Tim Ferriss says, I'm going to fire off some rapid fire questions. And his first question is like, you have $100 million to invest, but you can't split it up. You basically have to choose. Well, actually ask him what cryptocurrency or what digital asset would you choose? And before he even finishes the question, he says Bitcoin. He says like Bitcoin's like it's like the zero. It's the base of all of this. And so to hear a guy that is involved in as many different projects as he is to say, without a doubt, if I had to choose one asset, it's Bitcoin. That was
They all
interesting.
do that. They all do that. They all own Bitcoin, but you don't hear them market that ever. They're always marketing their other shit, but they all own it. You won't find a single one of them that doesn't have, I'd say, even a majority in Bitcoin. Obviously, there's those rare edge cases of like ETH maxis, which I don't even know what those people are exactly.
Dude,
ETH maxis are like my favorite group of people right now because they just like say like, well, ours is decentralized and more secure to like the Solana people, which they don't even hear themselves, it sounds like. And then the NFT people who get angry when you right click their NFT. Those are my two favorite people on Twitter right now.
The right clickers.
Yeah.
Dude, if DeFi and all of that worked and there wasn't this like tail risk, like I was saying a bit ago, like
yeah,
it'd be cool. It'd be cool if I could go and take excess collateral and lend it out, but the smart contract risk and all of these things, they're just like it's just so obvious that it's not ready yet. Like maybe one
I
day
mean,
it'll
not at all.
be
It's like
there, but
unusable. It's like unusable for anybody who's a pleb.
well,
It's like
yeah, and the
nearly
fees,
unusable.
right? And that's why you've seen all the money go into Solana and Avalanche and all these other altcoins, is because they're cheaper to use. And it's
They're
like
just centralized.
clearly the market, there is clearly a market demand for a liquidity, like a show up and provide and withdraw and collateralize against liquidity without having to provide KYC information. There's clearly a market demand for that, but their execution is just it's not there. And to me, the risks, like when you get paid these yields in these DeFi protocols, they're in these like altcoins, and I'm like, I don't, first of all, like the yield of giving up custody is like not really worth it. But then like if there's a smart contract bug or something like that, it's just all gone. All of it's gone forever. Why do that?
It's not worth.
Like
It's not
it's
worth
not
it
worth
at
the
all.
risk.
Like
Right.
I say this all the time. Like the interest rate should be way higher for the amount of risk you take. Like it's ridiculous how low they are for how much risk you're taking. There's hacks. There's frauds. It's just straight up just issues with the tech, like just human error. And then like Bitcoin compounds, what is it, like 150% every year for the past 5 years, and you're giving up your sovereignty, your keys for an extra like 6%, and it's just, why in the
Not
world would
even
you ever do that?
anymore.
Yeah, I don't even know what they are. They're
It's like
garbage.
2.5
You're
now after
you're
half
just
a Bitcoin.
greedy. I mean, that's what it is. It's just greed. Like you can't just sit in Bitcoin and do nothing. You got to like try to get that little bit more, and you get crushed for it. Like the Badger DAO hack that you brought up, it's $120 million just gone, and those are your sats. And to lose Bitcoin at this time in its adoption cycle is just tragic, and you're going to regret it so much because you wanted an extra 4%.
Yep. Well, that is a perfect segue to our boating accident of the week.
All right, it's time for the boating accident of the week.
So I know we just talked about it, but BTC BAT, who's our boating accident of the week?
It's Badger DAO.
Badger DAO.
RIP. So Badger DAO was this protocol on Ethereum that was marketed to provide yield on your Bitcoin. You wrapped it. I don't know what that means. It's Christmas time, so you wrapped it, you put it in the thing, and then you get the thing out. I don't know. But yeah, they got hacked. You get more yield, but you don't get actual Bitcoin. You get wrapped Bitcoin, and you have to pay a bunch of gas fees to unwrap it. And so really, like, unless like you have like millions and millions of dollars, you probably got scammed. Well, actually, even if you did, you got scammed. You got scammed even bigger in this case because they got hacked. And so it was a front end exploit apparently. So it was like due to the website, not the protocol. And which is hilarious because also the people want insurance, and so they pay Nexus Mutual to get that insurance. And Nexus Mutual goes, "No, we're good. We can't pay that because it was a front end hack and not covered by our terms." So always check your terms of service for insurance. Maybe the real boating accident is Nexus Mutual because they're just like, yeah, we're not paying. Sorry. But to be fair, like they clearly stated that like that wasn't part of it. So, you know, implicit bullshit, but you know, explicit, like they were in the right, I guess. So, you know, if you're gonna try to get yield on your Bitcoin, you gotta know the risks. You gotta know the risks.
I mean, not your keys, not your coins. Pretty simple. And the wrap Bitcoin, I know a little bit about it. I mean, it's a product from BitGo. They just wrap Bitcoin and put it on Ethereum, and it's just on their balance sheet. And so, like, you basically just own a BitGo IOU, and then people think that they're owning Bitcoin when they have wrap Bitcoin because of the name, I think. So that's the first silly thing about all this. And then you lost your Bitcoin, right when it's going to go to the moon, right when, you know, central banks are printing up everything and it's all the fundamentals are bullish. You lost your Bitcoin because you wanted to mess around on Badger DAO. Congratulations.
You're a boating accident of the week.
You got beavered. Dude, guys, I got this this thing. You know what this is?
Open dime? Is that an open dime?
It's an open dime.
Are you going to give it to?
I don't know. So I haven't funded it yet. I think I'm going to put 250,000 sats on it, which is about $100 worth right now because of the crash.
I got one over here.
But, you know, if somebody loses it, they lose the Bitcoin.
I got the orange one.
Oh, I got the orange. Who are you going to give it to?
I don't know. I gave them all away already. This is the last one I got. So these make great wedding presents. I give them wedding presents.
My buddy Josh is getting married. Maybe I'll give it to them for
this is a Value Stacks holiday gift giving guide.
Yeah.
And buy your not orange pilled friends some open dimes with some sats.
Yeah,
great time to fund it.
It's so hard for normies to like get it off this, so it's kind of good. I mean, it's not really,
right.
but
they like can't
it's
sell
scary enough where they're exactly. But I do put it in like my buddy Brecky Bitcoin makes 3D printed little nice holders, and he puts the initials of the, you know, people getting married on it. Looks nice, and so you just put it on a bookshelf. You like put it on the bookshelf, and it's, you know, it's hard to lose like a thing this big that looks kind of nice.
Oh, is this like the stone?
No, that's his new project. This is just a 3D printed.
Those are sick.
Open dime holder thing. Yeah, sick. But they make great gifts. People dig them. You know, when you give them Bitcoin, their face just lights up.
Dude, especially when it crashes, right? I was telling someone last night, I was like, you gotta get this Bitcoin thing, and then literally it's just like, boop, 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 boop. I'm like, even better. Now's even better time, and they're like, are you sure?
Exactly.
Like, it seems like this is not a good idea. So Brecky's at Swan, right?
Yeah, Brecky's our creative director. He does all the, you know, pretty much all the media all the videos, Swan Studios, basically help Bitcoin filmmakers get their stuff out there and production. And he's really talented. So a lot of our fun things that we do at Swan comes from Brecky's brain. Super creative.
Yeah, let's transition and kind of talk about that. So love to, I mean, I think I know a little bit just from knowing you for a while, but kind of give us and the listeners an idea of how you went from normie to research analyst at Swan, and what was that path like, and what did you do right? What were the really good moments, and what slowed you down?
Yeah, I mean, I'm probably good to talk to for anybody who's like, thinking about switching careers and working in Bitcoin. I was a sports physical therapist for 5 years, and I was a director of rehab up until basically from 2015 to 2020. That's what I was doing. But I fell down the rabbit hole in 2017. And it really goes back to like basically college. I started in business school, and it was in 2008. And I was like young then, so I didn't really pay attention that much, but I was disgusted with the corruption of the bankers. I knew just like intuitively that I hated banks. And I think that's from my dad, who's like a gold bug and stuff. So I was going into business school as a freshman, and I was just bored in those classes, and I didn't agree with like what I was hearing in the economics course either. And I was like, what is this? And then my family's like a big healthcare professional, a lot of doctors and dentists, and it's kind of what my family does. So then I switched majors to biology and physics. So went into that, ended up going to get my doctorate in physical therapy, and then kind of forgot about financial world entirely. I was pretty ignorant of everything going on for a couple of years while I was focused in grad school and kind of doing all that. But then when I got out, I kind of returned my focus to the global financial crisis. Around 2016, I started reading, books about that or documentaries and digging into like central banking. And then I read The Sovereign Individual. So I was kind of like primed when I found Bitcoin. I kind of understood like the problem and like the manipulation from central banks. And, I hated them. I honestly don't know what, it sounds bad, but I don't know what drives me more is like my hatred for central banks and, what they do, or my love for Bitcoin. It's probably like a mix what drives me. Like I really want to like end their power over the people. And I just think they're kind of like a parasite on the world, essentially, just sucking the wealth and acquiring power that they basically stole.
I tweeted that recently. I was like, I'm not a Bitcoin maximalist. I'm an anti-fiat maximalist.
Yeah, like
I just hate fiat.
Disgusting. It's honestly just disgusting what
it
they
stands
do.
for.
What it stands for, and then just like the 2008, just the bailouts and just the bot regulators. I mean, the whole thing. It's just disgusting. And like Bitcoin just offers like an alternative to that. And so I found Bitcoin in 2017, just basically fell down the rabbit hole. And I honestly just like shut up and listened and read for like 2 years. I just kind of learned from everybody. And then around that time, I knew I had to kind of switch careers. So I was like, how does a sports physical therapist get into Bitcoin? And then, it took me a while, like a lot of rejection and just kind of shamelessly reaching out to people, going to meetups, writing, just like tweeting. And eventually, like it was my own gradually then suddenly story where, one kind of DM to Corey got me an interview in 20 minutes later, I was interviewing for this like client services role.
Hell yeah.
And then once you get the interview, it's kind of like, if you put in the work, you're like ready for that opportunity, And so when I did the interview, everyone was just kind of laughing because, it's just like, all right, you're a Bitcoiner, you'll do, you know what I mean? So really amazing that I like landed there, I still got to like pinch myself a little bit, but it's just kind of like a lot of work that leads up to that opportunity, and you just got to be ready for it. And that's kind of what happened. So did the client services, I still work in client services a little bit, like answering customer problems and stuff like that. But most of my jobs is spent now in content and writing, analysis work for our private clients in our like monthly newsletter. And then I do a lot of our other newsletters and like communications. There's a lot of blog posts I write. And I just kind of work in sales a little bit, but mostly like our sales at Swan is essentially like a Bitcoin customer service team, because we just answer questions about Bitcoin, right? And just like help people understand it, make sure people are understanding wallets, how to use them, security stuff, just anything that people have. It's just kind of like, that's what I do for work now, which is, it's honestly just a dream come true. So it's amazing.
Exactly.
The fact that you get paid to do that, right? Like,
yeah,
cool.
Yeah. I mean, it's a lot of work though. I mean, it's kind of like you're building now, like for real.
Yeah, we're not in we're not in the champagne bottles,
No.
castles. Yeah, we're very much in the I'm eating chicken breasts and rice. Like,
well, yeah, man. I mean, yeah, you gotta want it. You want to really want it to work in the industry. And like for me, it was all about just like looking back and saying like you helped Bitcoin.
That's right. The why
come to be, right?
So
yeah,
because we started right at about the exact same time. Right. Like I started at Casa, right? I think it was like within a few weeks of when I remember us like going like through like the interview processes together, and
right, man.
And we were just like, whoa, like when we met, neither of us worked in Bitcoin. And then like before we knew it, we both worked in the industry.
Yeah, in like 3 weeks. Yeah, it was crazy.
And then it
yeah, that's right. I joined Swan. It was funny because people were like panicking about the price. And here I am just like, leaving my high paying Fiat job and going all in with my entire life as the price tanks 50%. And I was just like, we're not the same. You know what I mean? Like I could do this forever and not give a shit about the price, which is great because when you're working and building, like I've never paid less attention to the prices that I do now. Like I just don't have time or like care really, I'm just like so in the weeds with like the fundamentals and stuff.
Right.
But the price will do its thing. Like if we're right about our thesis, like our macro thesis and everything like that, like the price will follow. You just get,
I mean, it's not for the faint of heart. Like I've been invested. I was showing you guys in the publicly traded miners. These things are like the more leverage. The miners are exceptionally leveraged, right? Like they have leverage on their plant, property, and equipment. They have leverage on their cash flows. They have leverage on their machines. Like, I guess that's the equipment, but like they just, they are wildly leveraged. And the sell-off that we got yesterday was not because of that, but because of a similar thing, like leverage. Like people that and people often say that Bitcoin is like has weak fundamentals because there's so much leverage. And I'm curious what you guys think on this, because to me, part of it is like, yes, it is a highly leveraged market. But it's because there's many people out there that realize this is, the biggest financial opportunity in maybe multiple generations. And there's not going to be another financial opportunity in a redistribution of wealth like this magnitude for multiple generations. And so, yes, it's crazy to get leveraged, but also if you're going to get leveraged, it seems kind of the time to do it, because it's like this is a once in a multi-generational opportunity. Like I tell my friends, like, I'm not in this to like buy Lamborghinis and like this and that. Like none of the Bitcoin's being spent. Like I'm in it for the
Citadels.
The portrait. I want a portrait. I want the self-portrait. You like walk down the long hall, and at the end of the hall, there's a big chair, and it's a picture of our great grandfather Zach, and it's like a picture of me just sitting there, with like an ant miner in my hand, being like, "What's up?"
Yeah,
And
with
like that's
the
what I'm
body
in.
of Baphomet.
Yeah, the body of Baphomet, and like it seems kind of dark, but that's why I changed it to Bap. But I like to me like that is like it's okay. Sure, is that a little egotistical? Of course, but like I think it shines a light on the power of Bitcoin, and it gives people an ability to think further ahead and beyond their lifetime. And there's no if you, in a currency regime where everything is losing value, it almost makes sense that you would seek short-term gain over long-term sustainability.
Oh,
So
for
like the
sure.
thing that excites me about Bitcoin is like the ability to leave a legacy and it's like because I feel like right now the ability our parents and our even the first two generations above us have been able to leave due to fiat currency is marginalized. If we are to hold Bitcoin for multiple decades, this is something that could be unfathomable affluence with the responsibility more in my mind to contribute to like global prosperity with it, but maybe not an obligation, but like kind of at least like my kids will have a responsibility to do it. But
Yeah.
I think there's no tool, like money's a tool, right? Like there's no tool that humans have had in their tool belt up to now that enables them to think with that sort of long duration time preference. And it changes people.
The Cantillon effect has been quite the tool over the last couple hundred years.
Of doing the opposite.
Yeah.
Yeah.
It's like, well, we're on this melting ice cube, so let's drink the drinks before they get warm. Like, because they're not going to be worth as much.
Well, you see it in like, it's really easy to see that concept in where like emerging markets where currencies are really inflating, where like you think about how short their time preference has to be when they get their paycheck to run to the grocery store and blow all their money right there. They can't even think about saving or like building something or thinking even just a year out ahead to invest in something, invest in a business when the money's just being inflated. They have to kind of adhere to their short-term needs because their money's not going to be worth anything by the time they even think about that. So what's the point? So when you can like reliably save it, you can kind of like sleep at night and think about, all right, I can save my money. Like, where should I put it? And then you start to just lengthen that time horizon. And so like the last time we had that was the gold, when it was like the
Right.
gold floor in the Renaissance period, obviously like building, that's like safety and Bitcoin standard, like building all these beautiful things, Michelangelo's, blah, 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 all that stuff. So, I mean, yeah, that's the big thing, right? That's like the big dream of like creating generational wealth, but also just kind of building a better world, building long-term projects that actually impact, human life and increase living standards and prosperity and good growth. I mean, that's what it's all about.
Yeah.
So do you think that it is more challenging today to grow purchasing power than it was 10, 20 years ago or 100 years ago?
10, 20 years ago, like, yeah, because I mean, interest rates are nothing. There's like negative interest rates, like, obviously.
But I guess why I asked that is like because with the rise of Bitcoin and this like, set it and forget it type wealth accumulation tool, like
Oh yeah.
for those that are plugged in, like I've been dancing around with this idea that like it's like we often say like, it's tough, like millennials got shit hand. I don't think anybody really denies that. If they do, they're liars and delusional. But I mean, at the same
Well, I
time,
mean,
like we
I
have
might
this
push
tool
back
that
on that.
Yeah,
I might
like,
push
well,
back. Well, because we're around for Bitcoin's ascension.
that's right.
So
Exactly.
in a way, we got the
Exactly.
luckiest thing out of anybody. But
That's,
like not that information's not
but also
widely known.
like boomers, you could say like baby boomer generation is even luckier because they got all the wealth accumulation. If they played it right, they got all the wealth accumulation of the fiat system. And now Bitcoin comes around and they can just market buy 20 fucking Bitcoin and it's no
It's
big deal
true.
to them. And like you and I will never be able to market, like we can't save and earn enough to be able to make the I love when Bitcoin goes up, but but it's like a bittersweet moment because I'm like,
Yeah.
I'm never going to be able to afford another whole Bitcoin ever.
Yep.
And like,
Yeah,
you know,
that feeling never goes away either. Like it's just
but like but like, you know, the older generation, and I want to segue into like financial advisors and like the older generation, right? Like they have been chilling, like, well, maybe not chilling. They've been working their whole lives. Like, but you know, like they've been having their portfolio managed or whatever. And they all of a sudden decide, okay, well, you know, let's buy a couple Bitcoin. Like, let's buy a few Bitcoin. And like that is out of reach for most millennials. And so like even these people, like, and it never will be within reach for most millennials because of that, unless they inherit baby boomer wealth. So I'm wondering like where is like the financial advisor world gonna, like, where like the people, because baby boomers like largely have financial advisors.
yeah.
Like we have all either are or have been, you know, involved in that industry at one point. And so like where are financial advisors gonna direct their baby boomer wealth, because they are the ones who are sort of steering that ship. And then what are the implications of that when the millennials start controlling it?
Well, financial advisors, I mean, they basically have to like figure out how they want to get exposure to Bitcoin, in my opinion. Like, do you want to actually have the asset be held away and you advise your clients to take self custody, or are you going to try to like push financial products like GBTC or like basically securities that already align with their ADV and their compliance, and like how do you want to do it essentially? And so like at Swan, we're building a product where we want to build that integrates with them, but also, allows them to give self custody to their clients, and meet all their needs at the same time in terms of like the law and regulations and just like their own policies and what they actually want and what their clients want. So we're still building our product for them right now, and we're just kind of in this beta phase, working with advisors we're close with to see what they need. But as you guys know, there's just so much red tape in that industry in general around custody and all kinds of things. So
yeah, I'm really curious about Bitcoin for financial advisors. Obviously, I'm still a financial advisor, and so I know you guys have the page up on the website, but I'm just curious to learn more in general, like what direction you guys trying to take, and what.
Well, one of the things, like, we think that being Bitcoin only is an incredible competitive advantage when all these other advisory firms and teams and startups, I won't name names, but they're focused on all these other cryptos, and all it does is just take their time and expertise and cost to set up all these different cryptocurrencies. You have to learn about them, you have to tell them, and we're becoming experts on Bitcoin, and we're truly focused on only Bitcoin and focused on that. And there's a lot of financial advisors. I mean, maybe not a lot right now, but that align with those values of Bitcoin only. And we're trying to find those like really orange pilled advisors, right? Like, yeah, you're one of them. And so, and then basically those other ones, I think they're just going to get crushed because, in my opinion, right now you have a lot of financial advisors masquerading as crypto experts. And I just, it's almost, and they're advising other advisors. And I've taken the courses that these advisors recommend. There's Interaxis, and then there's the RIA-DAC, these like two courses to get like a digital asset certification. And these advisors just eat that up. It counts as like continuing education credits, and
Oh,
they
they
just eat
love
these.
them paperwork credits, dude.
Yeah, exactly. Right. And they get this little like badge saying that they're a digital asset expert. And I took them because I wanted to
Oh,
learn.
you know who I'm thinking of with 50 certifications.
Well, yeah, but I took the courses and it was garbage. I mean, it was like 30% Bitcoin, maybe not even like 20% Bitcoin. And then they most of their time spent explaining DeFi and all these products and then pushing diversification. And it just gets back to my point of like these two things
Convergence.
are not the same. And
Yeah.
Right.
you buy Bitcoin and it belongs in my opinion, it belongs in everyone's portfolio because it's scarce and has a decreasing issuance schedule, which both should make it a good inflation hedge. And I say should because this is like the first time we've actually seen this play
Right.
out of an inflation period, and it has performed well. But these other ones don't have those assurances, and they're just essentially different use cases. They're trying to be, DeFi and world computers and these other things. They're not trying to make money. So why would you diversify an inflation hedge with these venture capital bets?
Right.
Right. And they're looking at these things like they're the same thing. And it's because they don't understand what they are. And then they say, oh, well, we don't really know the winner. So it's better to spread your bets out. And that's just like not understanding monetary economics. It's not understanding the tech. And it pisses me off, honestly, because these guys are not going to be held accountable. And when you talk about financial advisors, the reason I get passionate about it is because, like you said, Bo, like they talk to all their clients. And so when you orange pill an advisor and educate them with the right stuff, they're going to tell all their clients about it. And then you see how the adoption can spread. So they can influence a lot of people, and they control a lot of wealth. And then those people, maybe they get orange pilled and they tell 5 more people. And so it's really like an easy way to get a lot of bang for your buck when you orange pill into financial advisor as opposed to just like a normal investor.
Well, look, that's why we started this podcast, because I think we both recognize that financial advisors are sort of the
gatekeepers.
beacon, the gatekeepers to the rest of the mainstream public.
A lot of wealth,
right? And we want to hit that.
Exactly. So yeah. Sorry, I get riled up about that.
Sam, I have a question, and I'll just say I am a little conflicted because, you mentioned like the Grayscale Bitcoin Trust, and sometimes I'm talking with clients, and I think I do a pretty darn good job orange pilling them fairly often, which is it's a lot of fun, and especially when they're asking me about crypto. But oftentimes the reason I'm conflicted is because I want to keep assets in house. And so the Grayscale Bitcoin Trust, especially now at a pretty severe discount, seems like sort of a win-win. Like they can wrap their heads around it. Like you said, it's like speaking their language. It's a trust. It's trading at a discount. You can do it in the Roth IRA. I keep assets in house. So that all seems good. So I guess my question is, I'm really curious to hear what like Swan's thoughts are, your thoughts on that, as well as, how do you guys plan on making money?
Swan. Well, I honestly, man, that's probably a better question for Andy Edstrom and Ryan Flynn, who are pretty much leading that advisor thing. Mm-hmm. I'm not exactly sure with that question, honestly, because I'm not working within that, branch of Swan.
Yeah.
So probably a better question for them on the last one. But in terms of like GBTC, I know Swan is trying to get people direct exposure to Bitcoin, right? So like somehow have like key management systems with multi-sig where it's not just an IOU from Grayscale, that you actually have some of this, decreased counterparty risk, at least a little bit, by holding your own keys or your advisor, some kind of multi-sig scheme where your advisor can somehow control custody if they want to, right? Mm-hmm. And so like, GBTC too, personally, I think the 15% discount is like, could possibly be a really good, alpha. Like if they just convert to an ETF,
I think it's about 19 now.
Is it 19 right now? Yeah. So like, it could be a really good move. I mean, but you're basically betting that it's going to get converted eventually, which that's a big question mark right now. And then obviously you're paying the 2% fee, right? So the fee has to come into play.
I look at the fee and I say, all right, well, how big is the discount? What's the probability that it's going to get converted to an ETF and that discount's going to close? And then what's the fee? How many years is it going to take? If there's a 20%, let's say there's a 20% discount, there's a 2% annual fee,
18% dividend.
That's a good point. That's a good point.
But
if it's within 5 years, it's a no-brainer. Just on the discount alone, if you want exposure to the spot investment vehicle.
It's still not actually owning the asset.
Right, but it's not, right?
Still
because
not
you don't have
asset.
custody. At the end of the day, like Bitcoin was created because you should be able to take custody of an asset. You should be able to have a bearer asset.
Mm-hmm.
We don't need to have a debt asset as our money.
This is why I'm conflicted. It almost seems like my fiduciary duty to explain that to the client that you probably shouldn't do.
Morgan Rochard said this too, right? Like if Pierre Rochard's wife, like she's a CFA and a CFP. She followed me on Twitter the other day. Shout out. And
yeah, she's great.
Dude, she says it's your fiduciary duty when a client asks you about crypto to explain Bitcoin to them versus altcoins. And I think at some point it will be when the SEC rules all these altcoins as security tokens. It will literally be your fiduciary duty to be able to distinguish.
That's the other thing. Like the amount of regulatory risk with these other tokens that these other financial advisors, like, it's just, you gotta ask, like, what are they doing? I don't understand like how they can look at that and see if it passes the Howey test.
Mm-hmm.
And it's so obvious that they do in a lot of ways. And that's what Gensler has said. And this is what the SEC does. They basically let out these little nuggets, basically prepare the market for what's about to come. And the commissioner just wrote a thing like 3 weeks ago or 2 weeks ago called DeFi, the opportunity and risks, I think it was titled, or something along those lines. I recommend people read it because they basically lay it out. They say, hey, these things are securities. We told people to come and register, but nobody's registered. Mm-hmm. Therefore, you can expect more enforcement actions. And then they're looking at these interest-bearing, that we talked about those interest-bearing ones. Mm-hmm. Like they basically have already said that they're basically banks. Like they should be viewed as banks, which is a problem because they've given out like 4 banking charters since 2008. It's like another way that they kind of gatekeep everything, right? You know, the consolidation of banks has been incredible since the global financial crisis.
One of them was to Square and another was to Avanti.
Yeah, I mean, if you look at that, look up banking charters since 2000. I think from 2000 to 2008, there was like 120 something banking charters given. And since the 2008 financial crisis, there's been like 4. All right. So they just like gatekeep everything. And so that's exactly what they want. They want to label these, stable coin providers as like money market funds, essentially. And they want the interest bearing accounts to be essentially like savings accounts. And they want to regulate them like banks and just cut them off, essentially. So I think that's a real risk. And I think you should just expect it. Like, that's the thing. Like, with how volatile this is, I'm always just mentally prepared for all of this, because the problem is the amount of new money and like the financial advisors that don't understand the difference between Bitcoin and the other things, they conflate them. And then when the DeFi regulation comes down, they'll sell their Bitcoin like idiots, thinking that they're the same thing just because they're scared off, like straight up. And so you should expect some headwind on the Bitcoin price as well if that comes down, but still long term, nothing's changed. And that should be viewed as a buying opportunity if you have, the dry powder. But that's kind of where I see that going. It's pretty like clear what they're saying. Like Gary Gensler has been pretty clear. The only weird thing that's going on is he keeps saying like, come register with me, but other companies have said they tried and then they received no callback from the SEC. And so that's one thing where it's like, okay, he's saying one thing, but they're like, he doesn't even meet with Coinbase when they try to meet with them, right? Yeah. And then the other thing is, I think I lost my train of thought, but with the ETF, like you approve a futures ETF, and then you won't approve a spot ETF. And to me, that's just ridiculous. Like you're just harming retail by giving them an inferior product that doesn't track the underlying well at all and more at risk for manipulation. And it just makes no goddamn sense. And, you know, that's just the SEC for you. It's like a political organization.
Right. Yeah. Sometimes I think Gary Gensler, like we should kind of put our trust in him because everything that he said is like fairly consistent and stuff. But then I realized there's bigger powers at play. Like he might personally want a Bitcoin spot ETF approved, but just because he wants that, I mean, I really do believe that at risk of sounding like a conspiracy theorist, there are bigger powers at play.
Yeah,
right.
Jeffrey Epstein is definitely involved.
Or Gary just wants to be the Treasury Secretary one day, and he wants to like not rush the, you know, he doesn't want to piss anyone off.
Smart.
They call it the GTF, the Ghislaine Maxwell Exchange Traded Fund.
Well, clearly he doesn't understand Bitcoin. If he's trying to climb the anthill that is the U.S. government, then he doesn't understand Bitcoin. So that's that.
Well, just like give me a reason. Like Tom Emmer, congressman, wrote a letter to him saying, "Why have you not approved a spot and you approved the futures?" He hasn't heard back from him. He signed it with another, you know, congressman. He wrote a letter to the SEC.
Do you think it's because there's additional custody risk involved in spot? But wouldn't there even like
that's what they say?
Question. But then also, the reason isn't that spot custody risk present in futures too?
And what about the Grayscale Bitcoin Trust?
Right.
They're actually custodying it with Coinbase Institutional.
Well, so all the ETF rejections have basically been based on two things: lack of institutional custody solutions, and then not being able to handle the manipulation or not be able to crack down on it effectively and stop it. And so like the early Winklevi rejection was there really wasn't custody solutions at the time. I actually like would side with the SEC back then, but since then there's been a huge maturation of the market. They have all these custodial solutions like Fidelity, you know, Gemini, Coinbase. These are like SOC 1 and SOC 2 audited, legit custody solutions. So can't really blame it on that anymore. Like, so that's done. So then it gets onto the market manipulation. And I you know, like last night doesn't help when you see these like cascading liquidations and really shady crap on these highly leveraged offshore exchanges. Doesn't really look good for Bitcoin. And it kind of plays into their hand to like reject it. But at the same time, you approved a futures ETF. So it's like, what are you even doing? Yeah, like if you're going to approve that one, you might as well approve the spot. And then you got like nation state competition too. Like Canada has approved these spot ETFs and they're running away. It's like the best performing ETFs in history for the Canadian stock market exchange. And now Fidelity just went over and did it on the Canadian stock exchange. That's America fall behind right there due to our regulators who are just slow and incompetent and won't make a decision at all or makes the wrong decision.
So I do want to add that there is some silver lining in the mining industry, right? Like the great mining migration out of China over into US. You've seen Texas boom. You've seen places like North Dakota boom. You've seen Colorado boom. And Wyoming. Like, so I do think. Look, this is like the biggest thing happening in our decade. The transition from a government-backed money to an energy-backed money. And I think that will have prolonged implications for our life going forward. And if we can, like, that's the challenge. It's like, it already exists. It's about getting people on board. Because unlike fiat currency, which is by decree, by force, Bitcoin is completely an opt-in economy. It's a free market opt-in situation. So you've got to educate in order to empower these people to use it. Because without the knowledge, there's so much other BS floating around, you're not going to know any better, right? And that's why I think like all the leverage is like, I'm curious what your read is, Sam, on what's been going on just like in the last month or so. I mean, we went, we had the doldrums with the hash migration in China over the summer. I think that made a lot of sense. Like Bo and we've riffed on that multiple times already since since the summer. We kind of laughed at like we were so bearish at the very bottom, and that was the bottom signal. Right?
We were buying, but we were
buying,
talking
but
about,
we were like, we're
really
crazy,
sad about it.
but like I'm going down with the ship, that type of like sadistic buying. And so I'm curious, like what your read is, since like look, we hit all-time highs like a month, like within a month.
69K.
Yeah, we hit 69. You've seen El Salvador buy the dip. You've seen MicroStrategy buy the dip. You've seen Marathon issue get oversubscribed to their convertible debt issuance. I'm just curious, like what is creating all this? Like, why did we go from 69K to 42 last night?
420.
I think there's basically two things.
That, huh?
I think there's basically two things. Like there's the leverage we talked about. People just need to get cleaned out, and from just like a market structure perspective, a lot of stop losses were hit, and it just cascaded. And then we talked about the broader macro, though. I mean, there just seems to be actual issues from a broad macro perspective of a strong. The big thing was that inflation's running hot, which is like a nightmare to the Fed. So the Fed can either make a choice. They can like start to, taper and raise rates even to fight this inflation and, help the economy where all these prices are raising, or they could, let the inflation run hot and help the bond market, with the real yields, basically get this debt down, but they can't really do both. And so they're in this like between a rock and a hard place. And as the inflation rises, you got the big like discrepancy is that the bond market isn't buying it, so yields are staying low,
right?
And it's like showing that it thinks it's transitory, which there's a lot of debate around that. But I'm pretty sympathetic to it because there's also like a labor shortage, and there's about like 5 million open jobs right now. There's basically a labor shock. And there's a lot of missing workers. They always brag about the unemployment rate, but the unemployment rate doesn't account for workers that are just missing. So
that's right. So I want to add something here. So I was listening to Raoul Pal. His he is who he is, but he makes a good point about demographics, that the labor participation rate is the lowest it's ever been, and
right.
And it makes sense because, and not only that, but the birth rate is the lowest it's ever been. We're all either almost 30. I think we're all like around the same age. We're like all about 30. None of us have kids. We're all in the top, I would say 1% of financial demographics, if not top 5% for sure. What guaranteed top 10%? All of us. None of us have kids, right? Like there is this shifting demographics which are playing into the whole inflation too, because as not only are we increasing the money, but the demand is shrinking because there's not new people being born that have new demand. And in fact, as more people die, the population rate goes down, like the population growth rate slows. You see that even exacerbate further. And so I wonder, like, and this is what Raoul Pal suggested, was that how much inflation can be offset by the deflationary forces of the changing demographics and the decreasing population. So, of course, if we have an increasing population, we need, there's an inflationary pressure there. But if we have a decreasing population, which we're at 0.2% population growth rate, whereas we were at about 1% a decade ago, if I'm remembering the numbers correctly. Fact check me, YouTube. But I mean, if you're at basically 0.2%, and it's not just like slowly, I mean, the growth rate of population is falling off a cliff. And so I just wonder, is the inflationary fiat currency going to offset the deflationary population growth pressures? And will they get away with it because of that? Or maybe not will they? Of course they won't forever, but how long can they get away with it? Because I think all of us today, we all know that the fiat currency markets are BS. And I speak for myself here, but I'm shocked that people still buy into it and that it hasn't collapsed quicker than it has. But yet here we are, where Bitcoin's crashing, even though the dollars are being printed. And so I just wonder, is there some exogenous force going on from population demographic metrics that are that we're not fully accounting for?
Appreciating. Yeah, I mean, absolutely. I mean, that's the question. That's why I sympathize with the deflation narrative. I think the end result is inflation. But I think we could go through another deflationary cycle. That's fine. But there's basically three deflationary forces, right? There's demographics, there's tech, and then there's the debt that we have. The debt itself is deflationary as well. So that's the question. Will all those things besides the debt are basically natural, right? So tech and demographics. Mm-hmm. You're not going to change that. Demographics is one of the data points that are set in stone, which is kind of rare. You're not going to make more babies 20 years ago. And so
immigration if we're just talking US centric, but sorry, that's
actually a really good point. I didn't think about that
because that's gone down a lot. Yeah.
No, yeah, but will the artificial inflation essentially that they're trying to create, will it get beaten down by these more natural deflationary forces?
Right.
And but the thing is, what I tried to say before is they will not let it happen. You already know that they're going to come in with even more of everything because that's the only thing they know how to do. Right. And you basically know, even if demographics win for a short period of time, the Fed will do what it can because they basically digging their heels in. Because if they basically have to admit they were wrong about everything if they stop. And so they're never gonna stop. And if you read, one of my favorite books is Fed Up by Daniel DiMartino Booth, in terms of learning about the Fed, because it's written by a Fed insider, and she gives really good you kind of get good insight of the culture of the Fed, and how it's so closed-minded, and they just look at their models and they don't even think about logic at all. And so it's basically a very myopic, egotistical culture. And they think that they're geniuses, and they think that they're right by everything they've done with the QE. And even though all the data says otherwise, they're going to do what they do. And when it falls, they just have this mentality that it's always better to do something than nothing. And they'll do something, and they're going to do it big. And I think you're just going to be shocked by the response next time when there's an inevitable deflationary event, which we might be in right now. So we couldn't be.
A couple things I want to add to that is, one is how could you be egotistical at the Fed? I mean, in 2004, I believe Ben Bernanke came out and said we basically solved the business cycle problem. There would be no more recessions or depressions. Okay, right. That's Ben Bernanke. So that just bugs the hell out of me. But and then I also think about what Jeff Booth talks about. I think we are certainly up against huge deflationary forces, and for sure, with the exponential nature of technology, the natural deflationary pressures will increase every year as we get better at delivering goods and services. But right now we're at 6.2% inflation. I just looked up the 10-year yield. It's come down a bit recently, 1.35 on the 10-year yield. So we're currently sitting at negative 5% real yields.
Per year. Come get it. Hey, come get it. When they have an auction, who the fuck's buying that?
And
buying
all
that?
our money, all
The
the
Fed
US
is.
dollars, I mean, all our debt is denominated in US dollars.
That's true.
So we
Yeah,
absolutely cannot allow deflation. It would completely
exactly.
implode the entire system.
You guys got any volcano bonds?
Yeah, man. I mean, the deflation too, like the people say that letting the stock market fall is a matter of national security. And I tend to agree because, you know, if they let the stock market fall with the amount of debt they have, the interest payment to service that debt, if they let stocks fall, GDP falls, tax receipts fall, and they basically default.
Yeah.
You know, that's why they can't do it. And then you're talking about pensions, you're talking about just destruction. So that when people say it's a matter of national security, that's what they mean. And so I don't think they'll ever let that happen. They just made the stock market, you know, a game essentially. They destroyed price discovery. They destroyed any kind of way to value anything. Nobody knows the value of anything anymore because they just destroyed, money itself, the interest rates.
I think that we're pushing up on an hour and a half here, so I think that's I want to lean on that because that is like the one thing that I know we talked about wrapping up on is like, okay, if it is such a manipulated game, does it make sense to DCA because the data points are all over the place? Or knowing the fundamentals of Bitcoin, should you just market buy as soon as you got the purchasing power? Now, of course, like fundamentals do say that, but like we're increasingly seeing like fundamentals say Bitcoin should be worth this, but here we are at 40 something thousand. Does that sort of give more weight, more credence to DCA because this whole system is built on leverage? It's built on, just
Volatility.
Volatility, right?
Right. I mean, to me, it's very individual. Obviously, I think this isn't advice or anything, but I think, doing a lump sum makes sense, like whatever makes sense to you, because I mean, Bitcoin has just gone up essentially. Like you want to get in on that price appreciation. But at the same time, it's all about managing your risk and managing the volatility and understanding that this is an extremely volatile asset. You should just assume by now that that's a basic characteristic of this asset. And so what makes sense to you? Like what allows you to sleep at night? Because the only important thing is that you stay in this market for a long time. That should be your goal. Because the volatility is like a good thing. You want to be in the market long enough so that you actually benefit from the volatility upwards as Bitcoin continues to be adopted as a global, money. And so the key is to stay in the game. Like that's the only goal you should have, is to stay in the game. And so dollar cost averaging is a way that keep people in the game. They don't think about it. It reduces the risk of selling early. You're not as emotional about your assets. And you just think about, somebody in May, if you had two people with $20,000 and the one smash bought $20,000 and the other one maybe bought 10,000 in the dollar cost average, just think about the experience they had that summer. Like the dude had to watch his savings get cut in half, and he's much more likely to be extremely emotional and make really poor decision, like selling the bottom, because he lumps them in the beginning. Whereas the other person, this was their plan all along. They bought 10,000 and they said, all right, I'm going to buy it every week. And not only are they more likely to stay in, they're also going to benefit from the downward price action and get a better cost basis, like average cost basis. So they actually get more Bitcoin and they're more likely to hold it. And so I think that it's an extremely, it's the right strategy for a majority of people, because people are emotional and this is a volatile asset. And it's just, too many times I've seen people get destroyed trying to trade it or anything like that. And all they had to do was sit and do nothing. So yeah, I'm a big proponent of dollar cost averaging in general, which is why I work at Swan, obviously. But we also have smash buying. Like, I think both are good. You could cherry pick the data anytime you want. Like, hey, this is when this lump sum did. But like I said, it's about the emotional component of managing your, understanding your own risk tolerance with this asset. So that's my little 2 cents on it.
So in my job a lot, I talk to my clients about regret minimization framework. And it's like, okay, so a lot of the plebs listening to the podcast right now can maybe save 10 or 20% of their income. And if they take that every 2 weeks and purchase Bitcoin, they're dollar cost averaging. And that's, the decision is simple for them. But then there's the occasional pleb that's going to receive a $200,000 inheritance. And he's got to decide how to put that to work. And that's where you have to minimize regret. Maybe you put 100,000 into Bitcoin immediately and you dollar cost average the rest. Maybe if you're really aggressive, you put 150 or 200 to work right away. But it really depends on the person, and you got to somehow talk through those different scenarios. And talking through the scenarios is not living through the scenarios. So
exactly,
it's really hard to figure out what the right strategy is for you. But yeah, that's dollar cost averaging versus smash buy. They both have their merits and they both have their place, and everyone's different. So don't know.
Yeah, that's all it is. I mean, and you just try to help people understand that, and like it just depends on your conviction level too, like your level of understanding. You're more likely to hold this asset if you have high conviction and you know a lot about Bitcoin. Like you're like, all right, I understand what I'm investing in, right? So kind of like beginner level comes into play. But then dollar cost averaging is not really the right term, because it implies that you stop buying Bitcoin after a specified allocation, right? It's like 20,000 dollar cost average until those funds are gone. Whereas a Bitcoin savings plan is like you do that, but then you continue to save in Bitcoin every week as part of your savings plan because it's the best money to save in. So I like Bitcoin savings plan a little bit more than dollar cost averaging, just for that little nuance. But yeah. I think it's a great strategy. Like it also pays off too. The data is insane. Like if you bought, like I did the data, it was like $10 a month for 4 years straight, and or $100 a month. It was $100 a month for 4 years straight, because doable. I'm like, maybe a poor person, like somebody poor, could scrape $100 together, right? Like let's see like what a difference that would do. And in 4 years, I mean, it like turned it into like, $12,000 or something like that. And like, that's huge for somebody in that, socioeconomic status. So, it's just the right strategy for a lot of people, in my opinion.
Yeah. Well, let's wrap it up and let's do kind of a rapid fire predictions for 2022.
Okay.
So, Sam, why don't you start?
Let's see. Who do you think's the next country to adopt Bitcoin as legal tender? Paraguay.
Interesting. Okay.
Ukraine. Those are both good ones. I'm gonna go Colombia. So South America, probably. That's
I think Russia is going to invade Ukraine next year. Sorry.
Russia and China is going to invade Taiwan.
There we go.
That'd be like World War III right there. That'd be like a. I hope that doesn't happen.
My big prediction for 2022: 1 Bitcoin equals 1 Bitcoin. You heard it here first.
You heard it here first.
It's all about unit of account.
That's a pretty easy prediction, There's a lot of trust built up in that already.
I still think we're going to 100K.
In 2022?
We could hit it we could hit it this month, honestly. It wouldn't shock me. Like, I'm just ready for anything, boys.
I mean, it's possible. It's the contrarian bet right now. That's funny.
That's usually when you want to make them, right? Like,
right.
Buy when others are fearful and be greedy.
Who said that?
That asshole who said that.
We don't talk about him anymore. Yeah.
Yeah, fuck that guy. What about you? What's your prediction for 22?
Well, my prediction was almost as obvious as 1 Bitcoin equals 1 Bitcoin, because Russia's been invading Ukraine since 2012 or 2013. So they're going to continue to invade Ukraine, but it might actually be Kiev next year. So that's my kind of out on the limb prediction.
You've been talking to that person, your friend that lives there?
She's never there anymore, but
That's like, I was
no.
just wondering if you had like some insight, because I haven't heard about anything.
No, I
About
just
Kiev. That's a bigger. That's not Sevastopol. Kiev's like the biggest country, the biggest city in Ukraine.
I heard they were doing like 150,000 troops, like readying themselves to invade Ukraine. That's what I read. I'm not sure if that's real.
Is this Chinese forces or Russian or both? Neither.
I think it's just Russia.
I think after our embarrassment in Afghanistan, Russia and China, I know, are somewhat in cahoots, just anti us, and I think they're both kind of chomping at the bit, realizing that now's the time that we're probably.
That's a ballsy prediction, man. I like it. It reminds me of history. Like, you can have the strongest army, but if you have poor leadership, it doesn't matter.
Right.
So that's interesting. I'll do a prediction. I predict ETH 2.0 won't come about in 2022.
Oh, shit, I hope it
does. That's easy though. That's easy.
Proof of work for the win.
Yeah. Dude, I think ETH22 is gonna happen. ETH22 2.0.
It was supposed to happen this year and last year.
I know.
I'm just going with the
next
trend.
Next year's gonna be the year. Next year's gonna be the year. You just wait and see, dude. Gary V's in town now.
Ooh.
He's got the whole NFT queue. Bo's even kind of looking like Gary V today, you know? With that. Dude, it's been a great episode. I think we covered quite a bit.
Yeah.
Yeah, man.
Thanks for coming on, Sam.
Sam, how'd you feel about your first being the first guest on Value Stack?
Yeah, I'm pretty proud. It was a good convo. It was also my first podcast, so it was a good rip, just talking Bitcoin with Bitcoiners.
I don't think, did you know that, Bo?
I did.
Oh,
Sam,
I didn't.
Yeah, man. I haven't gotten on the podcast around yet, so
you'll be on Breedlove.
But this was fun. This was like yeah, right. I don't know if I can get that deep, man. I can't understand what words he's saying at the time. I'd have to get like a dictionary.
We'll hook you up with RB.
Yeah, man.
We'll get you on there. Be on there next.
Yeah, man. It was good seeing you guys.
All right, guys. Happy Saturday.
Yeah, man.
About episode 12.
Episode 12.
Buy the dip. Buy the dip.
Buy the dip. You'll never walk alone.
December 2021. 12/21.
Stack it.
We'll see you guys at
Hard.
100K.
All right. Peace out.
Later, guys.